traders, welcome to the TMT Stock Market Strategy video special report on a market top for Monday, April 18th. Now, I just wanted to get a quick promotional message out to you guys. We usually have the TMT Dark Futures trading room for $249. We're running a promotion for $49, lifetime lock-in guaranteed. Come by, drop us an email, support@tradingmarkettechnicals.com. Check us out. You'll see live trades happen in front of your eyes during market hours, okay? So I just wanted to get that out there to you. Take a look. It's really a highly profitable trading system. Anyway, this weekend, I did a lot of market analysis, and I really wanted to see on the longer term charts and a lot more importantly on indicators, what's the worldwide, other top indexes are doing worldwide, and see how that's going to affect our markets, obviously the U.S. trading markets here. Now, there's a lot of things happening, and they're moving kind of quickly. As far as the markets are concerned, we really haven't gone anywhere for the last 5 or 6 trading days. Yes, we did gap up that one day, and that was basically on the opening, and then we just kind of gravitated inside days. And this past Friday was no different. And then the last Friday before that, where they tried to get everybody short, and I said, watch for the bullish case on our options monthly expiration. Sure enough, we did get that, and we did finish up the week. But banks started to report, and this week, and they really didn't do well. The reporting is not so great. Now remember, what does that mean? Well, it's not great at all when you're looking at 18 to 20 forward times earnings in a fully valued market. You know, a lot of the big banks and houses have cut their estimates on the S&P to be fully valued, and which that I usually don't agree with them, but I do agree on their forecast. Now, you have to have stellar earnings in order for the markets to move higher. There's got to be another catalyst. Janet Yellen was very dovish on her last meeting, and that catapulted the market again a little bit. But after a while, you just cannot have free money. There has to be, companies have to be making money. And we had the banks report, JP Morgan that reported, came out and said, yeah, we beat. But if you look at the fine print, they beat because they cut executive pay. Not great. And they're going to have a big issue with the Dodd-Frank Act because they cannot make money like they used to. They have to lend the traditional way. So I think the banks here could be a move lower. And again, still too early to tell. Citibank, Bank of America, JP Morgan, PNC didn't do well. But I'm watching the bank sector. Even though they were up 3%, that does not mean that we're going to continue to go high. We gapped up into a big area of resistance. But that's not what my main concern is. My main concern is earnings. So if earnings become bleak or not so great, you just will not have a market that's going to rally. Okay. Now what do we as traders, position traders, long-term investors? We all need to do one thing: is to focus on your trading account, your size, what's your exposure out there, and this is what these videos are here to help you. Okay. Now I want to look at some of these worldwide, the European indices. Let's take a look at the French CAC 40. Now, there could be a couple of things here, a couple of caveats that could actually hurt, I think, the S&P 500. Well, what do I mean by that? Well, you see you have lower lows and lower highs here, right? I mean, there's no two ways of saying it. We have lower lows and lower highs here, 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 and again, tagging this thing, okay? First scenario, that the markets break up, come to this trend line and fail, that's going to hurt U.S. equities because we do have a worldwide market, right? Everything is pretty much humming at the same time. Give or take, one market maybe being stronger than the other. But that's the first scenario, okay? Now, let me remove this and let me show you the second scenario, which would, I think, still hurt the markets. You have an inverted head and shoulders pattern, okay? Here you go. Perfect, nice slanted neckline, which we kind of broke out of right here, okay? Well, isn't that bullish, Mark? It is bullish. However, when people are looking for value, they're not going to buy the S&P at 18 to 20 times earnings. They're going to take their money out of the S&P, and they're going to put their money in something like the French CAC. That's going to be a value. There's a discount here, okay? So I think both scenarios, whether they break down or this breaks out, it's going to be bad for stocks, U.S. markets, okay? And this is my analogy for why the market, I believe, will be topping during the earnings season of the next 2 to 6 weeks, okay, where we will get a market top. Now, anything could change, anything could happen, But I do believe that that during earnings season, when they start to realize that earnings estimates and forward guidance is not good, they're going to sell into this, and I'm going to show you why. Same thing here. DAX, German DAX, the biggest index in Europe. Okay, you have lower lows and lower highs, repetitive patterns. Okay, and now what happens? We pop up into this area, which coincides nicely with that 200, and bam, we sell. Still hurt equities. It will still hurt U.S. equities. Let's try this again now. Same thing, guys. Inverted head and shoulders, right? We have the neckline come in right around here. We broke out of the neckline. Let's say we pop higher. Money will come and flow into the DAX and out of U.S. equities for value, okay? So either way, either scenario, I do think that it hurts U.S. equities, at least in the short term. Next, we have the Nikkei, right? Japanese Nikkei, same situation. We have lower lows, lower lows, lower lows, lower lows, lower highs. We have that neckline, that head and shoulders pattern, inverted head and shoulders, which is bullish, inverted now, and we have that break there. Now again, still would be bearish for equities. Down still would even increase the selling pressure in equities. So our worldwide counterparts is not going to help U.S. equities. That's in my technical view. Okay. Now let's take a look at some of the indexes and the momentum. Let's take a look at some of the indicators that I look at on a regular basis, end of day and the end of week. And what you can see here, we have a volatility collapse, which is no volatility at all in the markets. And we're basically at the lows yet again. And I think you can see the Bollinger Bands have tightened, right here and right here. And if we start to break down below and break down from the Bollinger Band and then close back in, that's going to give a buy signal to VIX and a sell signal to the market. Okay, so the VIX at all times, just about lows, at their lows now. And I suspect that the markets are, as you know, the markets are made to fool the masses, and I do think that the markets will probably pop up going into we have big cap tech next week. We have a lot of earnings next week, and we're going to measure how those earnings are. Now, even if big cap tech, they come in line, they'll probably run them up. They're going to push the VIX lower, and then at one point next week, I would imagine we would have some sort of a top in place, or a capitulatory top, even for that matter, that we run up into the highs, existing highs, or new highs even. And I'll show that to you on the spiders and the Qs. But as you can see here, VIX at the lows. Okay, let's take a look at stocks above the 50-day moving average. Ridiculously overbought at 86%. Every time when you get up here at these lofty levels, you get a market drop. Okay, we're here now. Does it have to happen Monday, Tuesday? Absolutely not. This is a longer term view. I want you guys to be prepared that at any given moment in the next 2 to 4 weeks, 2 to 6 weeks even, during earnings season, we should see a market top for a brief sell-off. And we don't know when and where this will stop, but we'll probably get the next big move. It'll be down, not up. Yes, we will pop up, but I don't believe that the bigger move is going to have a new leg up on a new bull market. I don't think so. All right, let's take a look at the next chart. The McClellan oscillator was sitting at plus 16, which is a neutral market. And as you can see here, every time when the McClellan oscillator is sitting at 0, plus or minus, give or take a couple of points, we have a neutral market. That means what? Plenty of room to run to the upside and plenty of room to run to the downside before we become overbought and or oversold. So lots of stuff over there as well. Okay, let's take a look at the New York Stock Exchange new 52-week lows at 7%. Guys, 7%. That is extremely low. Okay, so what happens is when you have lows like this, what happens? You have market tops. Lows, market tops, interim tops. Okay, little tops here. And then when you have these spikes, you have market bottoms. Big spike. Here, market bottoms, market bottom, market bottom. And then here as well, when you have these big spikes up, market bottom, we rally again. So 7%. That's extreme. So I'm looking for a market to sell off in the next 2 to 6 weeks. The NYUD, that's the advanced decline with volume, which I love to see, is showing us what? Lower lows and lower highs. We have bearish symmetry here, right? As the market is moving up, we have divergence from our breadth. Not good. So, guys, again, another feather in the bear camp that says use caution. All right. Let's take a look at the bullish percent SPX, which is based on a point and figure chart. And every time when we get to a crossover, right, we get a nice little move up and or down. We got that. We got a nice little move down. And you could see down, and we had a big move down here. So now the markets are doing this, right? They're intertwining the 8 MA. When that happens, that means that we're ready to vacate the premises. And look what's at 77%. So the next logical move would be lower. Now, how much lower, how far? Again, nobody knows until it happens. Okay, let's take a look at spiders, and I just wanted to show you one more where we are here. As you can see, we have gone nowhere in April. We had one pop up, and again, 2 dojis in between. Okay, so really we've gone sideways. April has been a very dismal month of not doing much. So this is where I do think that the markets are ready to make a big move. Now, again, I do think that we could probably move into this area here, okay, which is heavy supply, as you can see. I keep mentioning it on the free videos. And then once we start to move back up, and then we start breaking back down again, we'll decide where this will go. We'll put some fib targets down below of where this market may stop. But as of right now, I do suspect a market that's very toppy, very heavy, okay, price action is very heavy, and at one point in time, you're going to get sellers, willing sellers to come in and sell this market. Now, is this my view? This is my technical view. I have, as you guys know me, I have no bias to the markets at all. I could care less if it goes up another 3,000 points or goes down 3,000 points. What I'm here to do is educate you to make sure that you guys stay on the same side of the trade. Okay, can this market go up and break up higher? Absolutely. That means that something happened that created an event to push price even higher to where it should be. And then we would reevaluate the situation when that time comes. But as technical analysts and traders, we want to try to get an idea of where the next move may be. And again, quick recap, next week is a lot of earnings. Next week, earnings is going to decide which way this market is going. And I do think that a large cap tech, even if they beat a little bit, they're going to sell into it. Okay? Bank of America came out with their survey for institutional investors, money managers, and retail of their accounts. And it's been noted that the institutional mutual funds have been selling into this rally for the last 7 weeks. Okay? So that means that smart money is getting rid of some positions into this rally. Doesn't mean that it's going to go again. It's going to go lower or go higher. I just think, and with all of the cards leaning extremely, extremely bullish, I do suspect that the markets will at least move lower going into the spring and summer months. And then that's when we usually get a little bit of strength going into, of course, some volatility September, October, and then the Santa Claus rally come in November, December. Okay? But look for a market pullback between now and the next 6 weeks, which I do believe the market will put a short-term top in. Have a great weekend. Enjoy the weekend, by the way, and let's see what happens on Monday. Take care, everybody.